So car insurance prices are way up, and they're way up. We're going to go over some details in a moment, but there's one main factor, one issue that could cause your car insurance to be astronomically out of pocket for you. Let's dive in and go over some of the pieces that have caused the rate increases, some of the issues you have to look out for, and of course we're going to dive in and go over the main pieces. There's actually 5 coverages that have increased in the last 12 months. If you look back 24 months, it's increased even more. Your average from 23 going into 24 has been over 20% of an increase. That's a lot of money. For that person that pays $200 a month, that's $240 a month now. That's not an easy pill to swallow. On top of it, it was more than 15% the year before. So we're probably 35+% on average from the last 2 years. So what are the parts that are causing this? The first one is your bodily injury. The liability for people getting injured in car accidents is larger than it's ever been. The cost of medical has gone up. There's a lot of things. I have a video that goes more in depth that we'll link at the end. But the next thing is your property damage. If you damage someone else's car, there's a lot more expensive cars on the road. Since 2020, we started buying a lot newer and nicer cars. The cost of repairs for those newer and nicer cars have gone up quite a bit. Even though inflation technically only rose 3-ish+% over the last year, the car insurance is keeping up with the cost of the car repairs. Those have gone up over 9+%. Once again, I'll link that in a more detailed video at the end, but that's playing a big factor. The medical and the cost of repairing your car is way more expensive if you've bought a newer vehicle in the last several years. More importantly, to put those two together is we're starting to see a trend where there's what we call PAD, possible additional drivers. And letting people borrow your car has always been an okay thing. Most insurance companies are okay with that as long as they're not residents of the household. Sometimes they have to be related. It just depends on the situation. In some cases, in a lot of cases, we're seeing more people that aren't disclosed or don't live in the house that are driving other people's cars. When they're getting in accidents, they're just filing the claims. Insurances are cracking down. They know a lot of the times when someone lives or doesn't live in the home, and they don't necessarily have ways to stop that from being frauded until an accident happens. And it's one of those 50-50s. Half the time it's covered and they have to pay it. The other half, they catch the person and they're off the hook. But guess what? Because you thought you were saving an extra $20, $30 a month, now you're down thousands of dollars and you're in a lawsuit from someone that you injured. The third part is the collision. Collision, like we said, the cost of repairs is massively increased. That is going to increase. The fourth is comprehensive. We are actually having a lot more comprehensive claims. In the colder states, you're having a lot of snow. Although this year, not so much, but in the previous years, a lot of car accidents due to slipping on ice, a lot of car accidents due to hitting deer, animals, things like that. On top of, we're having a precedent year for having weather claims. The fifth one is personal injury protection. A lot of people in a lot of states are requiring some sort of medical. Because the cost of medical has gone up so much, a lot of people can't afford the medical and the car insurance and this and that and all of the things they're doing. Shoot, grabbing a thing of milk this year versus 2 years ago, there's way more than the 3% inflation on certain products. We're noticing the cost of eggs have gone up, the cost of living has gone up, the cost of car insurance has drastically started to catch up with that. But because the medical increasing, we are seeing people starting to carry more medical on their car insurance, and states that require it are having to charge more because the cost of the medical has gone up. I know this is a lot and it might be confusing. If you are looking for car insurance and you're looking to get the right company, the right fit, the right pricing, there's a ton of companies out there that are following what we're saying now. But if you're just lost and you want to get the right steps to take, I'll put a link in the description below where you can work with an independent agent. Typically, they are one of the better fits because they shop with multiple companies. So you plug in your information with them, they go out and look at different companies and type up all the quotes for you. You essentially pay the same thing you would have paid going directly to the company yourself, but because there's an independent agent involved, you've got that advice, that help, that someone can walk you through all of the steps and the traps that you can avoid. The sixth is the largest impact to this group is the uninsured motorist. This is becoming more common for those that can't afford insurance. I've had customers go 50+% increase in price, and there's nothing that they did. The only way to fix that for them, at least with the company they're with, is to find a different company. If they couldn't do that and it's not affordable anymore, some people have just said, forget it. I'm just not going to carry insurance. I'll just drive to work and hope I don't hit anyone. If you do, the severity is just extreme. There's legal stuff, but now you're on the hook for hundreds of thousands of dollars. We get that part. Sometimes it's just not affordable, and there's a ton of stuff that you can do to fix that, but not everybody is watching this channel. Definitely share this with people that need it, but those that don't understand the way that insurance can get you a better price, can find a different company that's a better fit for you, it really plays a factor into people just saying, forget it, I'm just not going to carry insurance, I'll just live my life and I'll save the $200 a month and put it towards something else. By the way, that doesn't just affect you. If it's you as the other person who carries insurance, if you're hit by that person, hopefully you have the right coverage to protect yourself for those situations. That is becoming more common, especially in some larger cities. So you want to make sure that you have the right coverage, not just for you hurting someone, but you being hurt by someone that chose not to carry the coverage. So Mark, you've wasted a lot of my time. You've talked my ear off with all these cool facts, but I clicked the video because I wanted to know the one thing that I needed to know that I need to avoid when I'm shopping for car insurance. That one thing is the liability bodily injury limits. Now hear me out. There's a couple things that this can do for you. It's a benefit for those that just need the cheap deal today. You're going to pay for it later. But if you carry a higher coverage and you lower it to a lower coverage, when you go to a different company, you're going to get not a discount, you're going to get a lower risk. Because imagine someone's up here and they're paying for a $250,000 coverage, but they come to your company and say, I only want $100,000. I haven't had any claims, I had any tickets, I'm a good person, good driver, all that, yeah. And they're going to a lower coverage. That company is going to say, ooh, yeah, that's a good risk, let's take that. They've already not had bad claims and they're willing to do a lower coverage, so we're not on the hook as much. Now, when it renews, what companies look at is what you previously carried. So when you renew that policy, that's gone away, and now your new limit is that lower liability limit. If you keep it the same, that risk has changed because now you're someone that carries lower liability and you keep lower liability. So you may see a slight increase on the renewal by going from a better coverage to a lower coverage and keeping the lower coverage. The opposite is true if you want to go back. So if you're at a lower coverage and you want to go to a higher coverage, then having that risk difference, they're like, oh, why do they want 500,000 versus the 100 that they have? Well, that's a little bit risky. Let's premium this up a little bit just in case. Make sure there's no scams happening. And you're going to pay that extra premium that year. But the benefit is if you now renew at a higher limit and a higher limit, you're not going to see that massive gap or that change in price unless there's some sort of a rate change. So if you're trying to beat the cost of the increase and you're really just looking for every option you can, one, shop with an agent. If you have an independent local agent, go to them first. If you trust them, then go to them. If you don't, the link is in the description below where you can find an agent to work with. Two, check out the discounts. Make sure you have all the discounts that you're qualified for. That agent can go over those with you. Three, don't necessarily change the liability limits, but if it's absolute dire need, then that is likely when you turn to shop and you go with the lower coverage, you're likely going to get a better deal initially. And four, check out your renewal options. I've got a video here that's going to go over the renewals and how to handle that type of change. If it's increased or decreased, you can understand what's happening there. Like I said, if you are looking for some of those discounts and looking for some of those what's changed recently, I've got a video here that's going to go a little bit more in depth. I'm Mark with Think Insurance. I'll see you in the next one.